Okay, hello guys. Pete's in. Hope you're well, mate. No sailing today. So I probably forget. I'm just having a coffee, and I know if I don't move my earpiece, it tends to go in your ear. So I'm very sorry about that. I've got to get organised with these things, though. All right, so we'll just get up and running. Welcome to Trade Setup. It's the live stream for the 24th of February. It's my little fella's birthday today, so I can't forget this day. He's at school today, so we've got a big weekend. Hope you all did as well. Um, for anyone that's new, sorry, it was just a random comment then. I just realised that when I said the date, the 24th. So top left-hand corner, you'll see us on Twitter, trade_setup. Feel free to follow us there. Facebook on the top right. But importantly, subscribe to us at YouTube, the bottom right-hand corner. Was it at TradeSetup, capital AU? So if you find that, you'll see the actual the little icon there, and that'll be us. I think there is a trade_setup, which is something else completely, but we're just Trade Setup. So, mate, yeah, feel free to follow us there. We have some bits and pieces coming up. There's a whole lot of material in there for anyone that's new that wants to go through, see what we've been talking about. Um, what sort of stocks we're talking about, sort of ASX focus, but we're going to start moving more into some indices, looking at some major indices. I think on the downside, there could be some opportunity coming. We're all expecting a bit of a crash, and probably the easiest and best way to trade them is with some indices. So we'll be looking at a bit of those. Gold's going gangbusters, so we'll talk about that as well. Some currencies. Yeah, some bits and pieces we'll throw in there. This is a whole lot of material on the YouTube website, and I think I did do a now what was it? There's something on there from Meetup, the Meetup group that we've got. We've got to get a bit more active on that, so I'm going to be doing more material on that. There was a bit of an overview, one I think I did the end of last year, and looking back on it, I think it's probably a tad confusing. So we'll do a few more. It's free material, but there's always some stuff on there you can look at. And if you've got any questions on anything at all, anything we've discussed that doesn't make sense, feel free to send us an email, and I'll get back to you to support@tradesetup.com.au. Now I'll minimise that. I'll get rid of that, and we'll get started. Oh, sorry, and just to remember that we only give a general advice warning on this. Any material I discuss is general advice only. You can just read through that, minimize that, and then I'll do one thing that I'll always forget, transition, so you can see the screen. So how is everyone? Having a good day? Or, well, I hope so. I know it's down 154 points at the moment, and I'm very happy with the positions we've got. We've only got 4 now. We got stopped out of an APT afterpay. So anyone that's following that, we just got stopped out in the second half. Locked away the final gains with a bit of a pullback on that. I mean, that was due. Realistically, that was due, and I think days like today, it's really hard. There's a lot of stocks that, especially if they've gone hard, they could be the classic. You look at APT. APT's been going quite well from this base at $30. It's 25. Was it 30%? 30% rally, $10. Pretty much went up from there. Had a nice little pullback here. You can see that was back in November. Pop up, lower high. Then the bulls started soaking up the selling pressure just below 30, held 30, and then pretty much as a clear run up on the daily chart anyway. The weekly's probably looking a bit more stretched, but anyway, the daily chart kicked up to 40. So you just know stocks like that on days like today, the jitters are going to get to people, and they're going to start, and I would too. I would just close out, especially if the market keeps creeping down. And then everyone's been talking the last 6 months, a massive sell-off in the US. US is too extended, everything's capitulating. We've got to pretty much shut down to the second biggest economy in the world. Um, US, how much more growth can you get into the US? So there's quite a few headwinds. We've discussed it for a long time, and the market just keeps ticking higher. But days like today, it's when you've got profits sitting on the table, and a lot of people would feel this way. You don't want to see that evaporate, and once the fear starts kicking in, you don't want to sit there thinking, well, I had some gains and I've just dropped 5% of those or half of those because I was stubborn and I was trying to do this, trying to do that. So I think that's why we're always happy to tighten up the risk, open, leave it open. So the stop was just below this high low, leave it open a bit because you don't know what's going to happen. But when things start getting a bit stretched and the talk starts picking up, and even though the market wasn't coming down, I'm always happy just to tighten it up. I mean, because you got to think about it. If it's going to go on, if it's such a great stock and there's still a lot of fuel out there ready to come into the market to push price higher, then you don't have to worry about your stock too much as long as it's not in a stupid spot. You shouldn't have to worry about your stock because it really shouldn't get tagged if it's a strong stock. Now, if it does pull back, I would rather get stopped out after the most recent high low in that trend up, which at this stage, a key high low is way down here, maybe on the weekly chart. You could have had a stop, say, at 28 bucks and you're still going really, and it was starting to get a bit heavy up here, but I'm always willing just to tighten it up. I mean, if it does have a bit of a correction, which is, to me, once you start taking out the last high low in a trend up, that's going to change a lot of people's minds. And it's the anchor level we always talk about to the move up. Once you start taking that out, I mean, you can see back here, we took out this anchor level here. It went sideways for a while, so you had more than enough opportunity to watch it, wait for it to reset and go again. Wait for it to reset and go again. You might give up a bit, but for the sake of risk and maybe feeling a bit safer, it's mainly risk control. Because that's all we really are is risk. What do they call them? Risk managers. When you're trading, you get into you've done all your analysis, it's kicked off. From there on in, it's just a matter of managing your risk. You don't have to think it, through too much, think about the run too much. You're just managing the risk on the way up. So in days like today, that it's probably going to be a few stop outs, but we've got the last few days, a few weeks, we've been adding, and it's not because we've got 3 gold stocks, WAF, we've got TPM, which is that was really on the weekly basis. You can see that went sideways here. It looked great on the weekly. It just took a long time to play out. Good news come out with regards to ACCC announcement on merger with, I can't remember, without Vodafone or someone. No, I don't know who it was, but anyway, that gapped up, took a partial, so we locked away some gains. Got a loose stop on that one because that could be, you would expect to get a bit of momentum, but it may gap fill. Who knows? Either way, we locked out some gains, but the other 3 are goldies, like WAF, kicked on, EVN. We got that on this little pop up through 4, just before the Vodafone. Thanks, Pete. I thought I had it right. EVN, and now Santa Barbara, which bit of a bugger that kicked off, got sold down the other day on Friday, and so we missed it. I think we sat on the bid at 388. Hutchison, thanks, mate. So with SBM, this day here, you can see the green day. That day there, we were chasing it up. So I sat on the bid at 388, 288. Sorry, didn't want to chase it, and lo and behold, you run into that resistance zone at $3, and it comes straight back down again the next day. Today's looking great. I mean, I would expect that being a goalie, a producer, and it's the WA producer too, to kick on, find some good support. Now, if gold is just rocketing up today, but in saying all that, the fact that we got 3 doesn't mean that I wasn't really trying to hedge or anything like that. It's just the fact that they look good. I try to keep my trading as simple as possible without over analyzing anything. I mean, you can look at gold and go, okay, gold looks good. It looks like it's going to go for a run. We all sort of knew that, but it doesn't mean it's going to go for a run because there's been quite a few false starts for a long time now. And if you just load up to the hilt because it looks like it's going to go for a run, but it hasn't started kicking off and there's no setups on the gold stocks and you're not waiting for your setup, you're just diving in because you think the world's overcooked, we're going to go down, gold's going to go up, and lo and behold, indexes just keep going up another 1,000 points on the Dow or 100 points on the S&P, and then you get stopped out on all your goldies. So I don't like to do that. I've got to trade what I see. And the fact that gold, a few of these would starting to set up, like SPM's just starting to set up, cracking through 304, I think it was. It's just pushed through there now. To me, it's starting to look quite good. It's off a good high low. In the longer term, you had this double bottom in place here at 250, and this high low at say 270, 260. That to me is just a pure and simple as a setup. And if gold wasn't running, I would still take that trade. Does that make sense? It's got nothing to, and if the US was in the world, it is in a bull market, but if it was still not any sign of slowing down, there's no negative news, and that setup looked like it was going to play out on a gold stock when gold's not running, I would still take it because I'm not going to second guess what's happening. You don't want to second guess what's happening. You just want to get into your setups that look good. They make sense. There's volume starting to tick up the last few days, so everything's looking like it's a go um, on the entry. So that's pretty much what happened with those three. WAF was another one. This, I think it was through 50. Yeah, through 50. So it's just push up through this high low. So everything's in place. It doesn't particularly mean that gold was going up. I don't know what gold was doing back then, but it just happens to be that we've got a couple of crackers, which has really helped us today. I think the market down 155 points now. We're up what, 1.5% just on these 4 positions out of 10 that we normally have. So we haven't loaded the boat at all yet. It just goes to show, I mean, you're picking the right stocks with enough liquidity, everything's in your favor. People are starting to step up to the plate. You can really get some good results in the bag. And just try trading what you see. I mean, there's going to be times when that setup plays out, pops up and turns around and stops us out, but that's just the nature of the beast. So yeah, I sort of point that out. That's all we've got at the moment. There's no real, I mean, look at everything else I've got on the watch list. Red all the way through there, red all the way through here. God, that's been, Select Harvest been absolutely belted. This is one that we're watching for a while, medical developments. That's, I did stuff that up a bit, didn't I think? I personally stuffed that up in my own account, and then we had an alert that didn't really make anything. I think it was break-even trade, and then bang, off she goes. So yeah, but that's got hit. It's quite a few, and that's one that you can see how it's gone up quite high. Look at the weekly chart. That at the end of last year just basically took off, and it's gone from about $5 to $11. So over 100%. You just know that days like today are going to trigger things like that, some profit taking. And people are just going to take money off the table. It's going to be a bit of a long squeeze. It's going to squeeze some people out because there's a lot of fuel that have been stacked up. And if you're going through your charts, the reason why we've only really got 4, we had 5 positions up till today, is because it's just tough to find something that's setting up nicely. The way I like it anyway, I mean, if anyone's been following for a while, I'll just get it up. I like the macro corrective phases, if that makes sense. So what I mean by macro corrective, I might be looking at a weekly and a daily chart. I like to see something, if it's pushed up like this on a weekly. Oh, sorry, yeah, no, on a weekly. But you got to break this trend. This trend could be broken down into just a move like that. I like to see something that's in a pullback mode. So you got this trend up, and then it's pulling back like that. You've broken the anchor, and then we start to hold up. We hold a high low. That's your entry because you're looking for the same sort of thing, a weekly pullback and then a weekly up we go. So I like that sort of nice solid weekly trend. You got this macro corrective action, meaning we've gone through it to a macro correction maybe or a weekly correction, and just try to look to the daily to see what sets up. Even if you've got nice big one, but I find it a struggle to get into, not so much on the weekly, but on the daily. If you've got a trend up as being solid, I always struggle, especially times like this when the market is getting overcooked. You know that probably a few people are going to look to take some profit sooner or later. It just has to happen. I really struggled to get into something that I would deem to be towards the end of a trend. Even though it's set up on the daily, everything might be setting up nicely. I think that getting in, say, here, as opposed to earlier on, when it's had some massive correction, it's coming off a nice base. It's probably not drawing a straight line, it's not very good. Just clear that out. Something it's gone up, it's pulled back, and you spend some time, really washing out some traders. They're meant to join, by the way, those lines. Something that's really pushed down. It's starting to wash out a few people, and it's building a base. Something that you can go, okay, that's my support, my resistance, and then we're starting to get that push out of resistance. First pullback, you bind the first pull, away you go. Something like that I always find a lot easier because I know if it's had a trend up or if it's starting to get a run on, that movement, especially if it's over the period of a month, a couple of months, even 6 months, it's done a lot of time of putting some of these buyers back on the sidelines, and it's set up, it's found a new base, and you're looking for a new major leg higher. So I find trading something like that a lot easier than getting in on, especially if this is a daily trend up, it's been going up for quite a while, the last 6 months to a year. Always find that a bit tougher because I just think that the outcome's definitely not unknown when it's it's a well-established trend, and every man his dog knows that. So when you get times like now, when the market starts to get crucified a bit, they're the first ones to get attacked because there's been no sort of form of profit taking. There hasn't been anyone locking away some gains. There's no heat coming out of it. So that days like today would be these ones I think get attacked a lot more, and you have people just diving for the doors, looking to book some gains, but something that's already cleaned out a lot of, you say, the weak hands, people who are nervous holders, nervous Nellies. It cleans them out, and only the strong buyers with conviction are staying into the stock. They can sort of ride these times out a bit better. And I'm always liking to get in a bit earlier here because you're getting in the unknown when it's not sort of, markets haven't really decided which way they're going just yet, but we've just got our setup. We've got some volume coming in. We've got all the ingredients for an entry on that. And then if it's about this stage, you had a bit of a pullback, it's starting to go again, and the market gets hammered like today, 150 points, it can weather the storm a lot better because it's getting accumulated by longer term traders with more conviction and things like that, as opposed to this trend where you get, so the top third of that trend is made up of, maybe you don't like to say that, but more retail traders that like a bit more confirmation when they're getting into a trade. And they're the first ones to bail at the first sign of weakness. Whereas you would suggest people in the know or people with more conviction have been buying a bit earlier, and they're buying in stages like this way back when it was a bit more unknown. Does that make sense? So I think there's been a few. I'm trying to find setups like this. I'm finding a bit tough, a bit far and few in between at the moment. But that happens. And that's probably a good sign that it's just take the foot off the pedal a bit more. Good to have some exposure to. Obviously, you've got to have some exposure to the market if it continues goes up. But it doesn't mean just because it's going up to dive into everything. And that's the last thing it means. You still stick with your strategy, still stick with your setups, stick with your game plan or your trading plan. It can really keep you out of trouble. Sometimes it's hard to see the market keep going up, and like we only had 5 positions at one stage, and we've done really well. But imagine if we had a few more that were kicking off. Really add to the results. That's just the way it is. At the same time, when it starts flipping, if you're loaded with 100% in the market in the stuff that hasn't really set up, and they start getting really chopped apart, you've got to have a great plan of, a risk aversion plan. What are you going to do if the thing gets smashed? So yeah, we'll take a look at, I'm just going to go over a few of the indices. We'll look at gold, what is happening. Gold's spiking hard. I mean, just because it's, anyone would look at that, a normal person would look at that and go, overbought. Doesn't mean it's overbought. It means that maybe we're sitting on the precipice of a major correction in all markets, which we've been talking about for a good part of a year even. 6 months to a year, there's been some nervous Nellies around. I mean, we've been some of them. There's been a lot of times when you're just really adverse to chucking risk into the market. So we'll have a look at that. I just want to go through, and then the index. I've got elders. I don't want to get rid of that, do I? I want to make sure I've got that. Let me go over to here. Not there. Here we go. So first we just go through the indices. Now this is an hourly chart. This is on the S&P. Not much need to go back any further. It is, had a bit of a sell-off the last couple of days, Thursday, Friday, coming into the weekend. But when you look at it in context of the trend, it doesn't mean anything. It really doesn't mean anything just yet. This is not anything to be too concerned about just yet. I mean, just because we're down 150 points now, they might open up. And I think the Dow is down about 300 or so at the moment. Let me just see, the Dow, 346 points. I don't know, that's a bit delayed, but expect the US to open down on, especially on the Dow, which is here. That's your longer term trend. The anchor to that trend is still, we're still a while away off that at 28,196. It's down 300 points. So that really is just, you can just look at that as more of a correction. The fact that the market hasn't pushed through the previous highs with any real conviction like it has previously. Last time it pushed through these highs and just kept going. Now the fact that we've got through pretty much where we are at the moment, this level around, what's that, say 2,900, this zone through 2,900, it's just broken that. So that's the anchor to the trend up. Just after we popped our head above into new all-time highs way back in the 14th of Feb, it's been sold off since then. So that's the one thing that I'm not liking too much just at this stage. But the anchor, you still got to respect your anchors. You don't just jump out willy-nilly because everyone else is bailing. This could be the world's best pullback to buy into. You don't know that just yet. Only if things are setting up. Well, I guess I'll reiterate that. The fact that the market's down 150 points now doesn't mean that you just go, all right, I'm going bargain hunting, because it has to have set up. For me, if it hasn't set up, there's still something. There still could be a lot of heat to come out of the market. We're trying to reassess at the moment because we know the coronavirus is just going. I mean, we're never going to know what's happening in China. They're going to suppress everything, in my view, anyway. It's always going to probably be a lot worse. And the fact that everyone's in lockdown and the numbers that have come out, you would suggest that they're going to be a lot worse. Now that we've had this bit of an explosion, so Italy, Iran, and where else was it? Japan, I think, in the numbers of new cases and deaths. This is where we're going to get the real data on how it spreads and whether it really is something to be worried about. So that's, if it is, then I would be hesitant to be jumping into buys just at the moment. Even if I do set up, I would want to see indices starting to form some high lows, start to see everyone else soaking it up and go, okay, maybe everyone's thinking the same thing. It's the same sort of look at head and shoulders. Yeah, it could do. This head and shoulders, yeah, agree with that. It's probably, your left shoulder here, head and shoulder here. Yeah, potentially, but that would mean that I'm not big on them. This is where it's going to, and that's the case. We're pretty much there now, and we look for a rally. It's only just broken that. I'm looking at this. I don't know what you're looking at, Pete, but this is as the shoulder. So yeah, it could be, but this could be the start of a massive head and shoulders. One shoulder here, head. We're going to have a pullback, and if we get a key lower high, this is only on the hourly chart. Don't forget. If we go back to the daily's in an uptrend. No doubt about that. With the anchor still way back at 28,250. The S&P is pretty much the same. With the anchors way back here at 32.11. It's another 120 points away. So it could give up a lot without breaking the uptrend. And the same on the NASDAQ. You've got your anchor to the uptrend, most recent high low on the daily chart, way down at 89.35. So there is no reason why this can't chop around here. We've spoken about this before, when markets create the fear and everyone's going, oh, it's going down, and they're getting chopped around. But all it's doing is cleaning out people and setting up, because it hasn't broken the anchor. If it breaks the anchor, it's a different story altogether. Okay, if you break the anchor to uptrend, that's when you've got to be thinking more about a corrective price action. But if you don't, it could just be cleaning out the new traders, anyone that's really not understanding price action as much. I hope that makes sense anyway. So none of them, those three major indices, are broken trend. This trend is still up. Now the DAX, pretty much the same on the daily. It's pushed up into new all-time highs with this most recent move up. It's been sold in the last couple of days, Thursday, Friday, but it hasn't broken the trend yet either. So the fact that gold's kicked on hard may be a bit preemptive. It may be, maybe it's thin on the upside, and people are going to just let it go, let it ride it out, jump on board the train there. But it could mean, one or two things. Either that's got ahead of itself and the market hasn't broken, and then the indices start going up and we'll have a massive sell-off in gold, because there's going to be a lot of longs built up there. They're going to have to get squeezed out of the market sooner or later. Or gold's right, and we're at the start of a massive correction, and that would probably add in well to the coronavirus and how it could get out of hand. Anyone else got some thoughts on that? I'm just trying to go through the charts and step away from the fear of it all and try to assess what we're seeing. And what we're seeing at the moment is not, technically not that bad. It might be a different story over the coming week if we start getting smacked around a bit. But for now, it's not. Gold's kicked off. I think crude oil's just getting knocked about, $1.50. It's on the daily chart. But even that on the daily chart, we've been looking at the support zone for quite a while now. And you can see it lifted off that zone. It wasn't much of a support zone way back in February last year. Took off, come back and retested it, failed, lower high, come back into it again, and then rallied up. And so 1, 2, 3, and retested it again and got supported. And we got right up to $66 a barrel. We have come screaming down. It's found some support again. It did push through a bit more. It has pushed up off that zone, but that could just be a washout, because we know this is such a strong, the market knows it's such a strong level, a key level, could easily wash it out. And then you got some big funds, whatever, buying it on the other side, just buying into the dip, soaping up soaking up all the selling pressure. And then this retest starts rallying from here. There's no reason why I can't just turn from here and up we go. And we go all the way back up, 65, 66 bucks a barrel. And if that does happen, it's suggesting that everything's rosy. I mean, it's going to be interesting to see how it plays out, but that's not telling me, if you're looking at this chart also, it's not telling me that the market is fearful just yet. It's a bit too early the trend is down into that zone, but it's starting to get soaked up. If we hold this high low and we start taking out this high at 55 bucks, for instance, it's just in here, then yeah, I think we are, we take out that level, then we've either got a much deeper correction and we're not getting the full story, but the chart's saying that crude's heading high, which would suggest that you probably find copper is doing the same thing. Indices start turning because it's all looking good. We just have to wait and see how it goes. I hope that's making sense, guys. So yeah, still just looking at these charts. The Nikkei, it's starting obviously up towards highs. You're going to be a bit hesitant. The market's going to be hesitant. But that's not suggesting we're going to have a bit of a sell-off just yet. If it does start breaking through these lows at 22, say 800, any sort of big sell-off there, then you look for the first pop and sell into a lower high, because that could be starting to attack way down at 20,000. That's your mini, that's your daily. Don't worry about that. Hang Seng, been watching that quite a bit. Now the daily on the Hang Seng, I haven't drawn up these levels here, but you can see that some fairly significant levels down there, and I'm suggesting it looks like this lower high coming into play. If this starts extending through and breaks through this zone, that's not looking so crash hot, and that zone's around 26,000. We could be a move easily down to 24.5 and below, because you've got the market's pressed up. We had this big pullback. It's tried to go again, couldn't go again. Lower high, sellers started coming, worked it all the way down to this 24, 25 mark, 24.9, 25. Pressed down, started to grind its way back in, up, found a lower high come into play, and especially with the fact that we washed it out here, that's not a very good sign for the bulls. And of course, you can see what happened after that. Basically got smacked straight down to about 26,000. We have reacted off this level here, so we still got this sort of higher low in play. We've also got the lower high, so it's that fight between the bulls and bears. Nothing has worked out just yet, but the fact that this lower high has come into play means to me that that's suggesting, if weighted numbers on the sell side, we're going to crack that level around 26 and potentially push back down and have another retest at least of 24.8, 24.7, this zone down here. So we'll see how that goes. Over to the AES6 at the moment. Not a great day today, but where are we? I've lost it. Here we go. That's your daily. So where are we at the moment? Down 156 points, you can see 156 points, just cracked below 7,000. So I know this is delayed a bit. Yep, it's about where it is. It's still, we still got this zone or this level through here, which is really the anchor to the uptrend at 68.70. Okay, not good be down 150 points, and that's going to scare the best of us. But it doesn't mean that we've got to, pack our bags, sell up, and move away for a while, because the market's going to go into free fall just because of what the news is saying. You remember, you've got to trust yourself more than you trust the news. The news I've seen so many times the market rallying and all the news has been negative, and it just keeps going up. So the news will always try to be fearful. So you've got to really just trust what you see. And at the moment, we're not seeing, we are seeing a big sell-off today. It could be the start of something. I'm not saying that, but until we get this push below 68.70 and really start putting pressure on the bulls, then this could easily get, just as tonight, we could, like the US has done so many times, it's gaps down on the open, as in, we come through the Asian session, the European session, Dow gets smashed, it gaps down on the open, and bang, the whole day it spends rallying back up again, and it makes back 300 points, back to where it closed on Friday or where it closed on Thursday. There's no reason why the US can't do that. Because don't forget, all in all, if you're investing in big funds, you've got to invest your money somewhere, and still, it remains, where are you going to invest it? The big thing that we did see was the US dollar. had a bit of a sell-off. And I reckon that was more of just a, had a big strong move right up through the highs of 99.68, finished above, straight back down on Friday. So a bit of a sell-off there. It doesn't mean that things are changing. We're probably going to get some profit taken into the dollar, into some other currencies, because there's a lot of, say, the euro down in support, the pound was in support, Aussie got smashed. So there's a lot of traders lined up a certain way in one way, and a lot of fuel in those markets that there's going to be profit taken, which could put pressure on the dollar. And the same into the physical dollar. If you're trading the futures index onto the dollar, and you've been long for a while, you're sitting on some handy profits, so you don't want to see those evaporate. So that, not a bad excuse just to sell off. We get that push through the highs, next day a bit of a sell off, take some off at least. So I think that's more of just some profit taking opportunity, and the same into some of those other currencies like the euro, just had a bit of a bounce, the pound, a good bounce, but that trend is still down. The euro is still down. Aussie has just capitulated really, but there's a big level. Is there? Is a big level further down? Yeah, I think it's sort of down towards 62.70. Let me just put up a line, horizontal line. Let's just go about here. See how far away we are from that. So still a few hundred pips. 62, say 63. Where we trade now, 66. So 300 pips away. There's still some room to move on the downside for the Aussie. But yeah, that's in a downtrend. So there has been a bit of, you expect that when it gets, say in the Aussie, this sort of beating its head down there, that there's going to be some profit taking sooner or later. On whether it's short term, medium term, there's always going to be some profit taking. So that's the way I'm viewing sort of the dollar, the currencies a bit, is more just some profit taking. Then a change in trend. I mean, that trend does not change. It's just maybe a bit of a bounce, consolidate, then go again on its way down. Yeah. So any questions there, guys? I hope we covered a few things. Gold, I just want to see Aussie gold especially. A bit of a look at that. On the lower time frames, I think it's extended here. I think we need to see if this levels can hold up at 24.69. Let's just go down to 4-hourly chart. Might be a bit better. Yeah, it's a bit better. I mean, it's getting a bit ahead of itself. That you do sort of expect some reversion to the mean, or at least some consolidation while the average catches up, meaning the EMAs. So that sort of blowout there, if it is a blowout, you would expect some sort of chopping around here. And if it holds above 24.69, starts to get soaked up, meaning a few higher lows start to jump in, then look for that trend to continue. But we'll just have to see how it goes. And if that trend continues, keeps spiking higher, you'd suggest that we're going to start seeing some pressure on the indices, the major indices, because they're going to be due sooner or later. There's going to be that breaking point where the market just goes, that's enough. We know it's overbought, sell off. I think the end of reporting season in the US, or getting there, I don't know whereabouts we are at the moment, but end of the ASX reporting season, getting there soon anyway. Could be people just going, that's it, profit take, we know where they stand, and then let's just lock away some gains and see what happens. Stay on the sidelines. So the higher it gets, there's probably going to be more people that will start to think that way. Go to cash, and then the more people do that, then the more pressure is going to be from selling, and sooner or later it's going to change the tune of the overall market. So any questions there, guys? Anything you want to take a look at before I get ahead of myself and just keep yabbering on? Got some goldies. We'll just see where they're doing today. I mean, they're doing quite well. It's been a bit tough. So we've only got 3. I would have liked to have had a couple more, obviously. With gold rallying $100 in a couple of days, you'd love Aussie gold at least. Anyone's going to love having a few more shares, Aussie gold stocks on there anyway. Where am I? There we go. So Saracen really 7% today. That's kicked on. You've got SBN's up nearly 6%. So I'm expecting that. I want to see that finish above 304. I want to see that power on into the close. That would be great. Some good liquidity. It's a good volume coming through today, the last 3 days anyway. Good volume come through on Friday on a bit of a down day, but it was getting soaked up okay. Today, yeah, it's kicked on, pushed through $3. So if that can finish above there, I'd love to see it above 304 or 5 at the end of the day. finish above those highs and see if it can kick on tonight. Another down day in the US tonight, then well, that's not going to be good if you've got the big blue chips. It's going to be good for the goldies. So the SPM kicked on. Northern Star, I mean, it's going. That was a bit of a tough one. I didn't like, if you're looking at the longer term charts, that big push up, big pullback down to $9, and then basically turned on a dime, went straight back up. So a lot of them have been harder to trade in that respect. I mean, look at Saracen as well. Same sort of thing, went hard, that rally up in gold, big sell off in gold, and thing got smacked back down again to below 3. So really, and then on the weekly chart, if you're waiting for a high low on the weekly, it just didn't play out. It just turned. So if you had the daily, even the daily was very hard to trade. So, if you bought it here, I think it was more luck that it went up than anything else, than good trading. OGC, will do, mate. But yeah, that's going up. They're all pretty much kicking on, apart from poor old Oz Miserables, Oz Minerals. That's down today, 2%, and that's got not really good volume on the downside, but it's heading down, which you don't really want to see on the day with gold's up. What else we got? AQG. So pretty much they're all doing well. RMS would be a cracker to have that. And we missed this one, WGX. I was thinking about alerting that as a buy through 340, but I just didn't like the risk on that. Lo and behold, we got a rally Friday night and gap up on the gold price this morning, and things kicked on. Can't get it all right. But that looks good if you look at WGX as one, if you're looking for something, potentially on that weekly chart. Look at this sort of pullback and consolidation and higher low over a good part of a couple of months, just below the all-time highs at 270. Or was it around 271? Yeah, this zone way back here, then that's looking really positive, I think. And it's got some good volume picking up, it was previously the end of last year, coming to the end of last year, some more volume sort of picking up in these couple of weeks, or this week anyway. That good day, that red day, it was a red day and it got soaked up quite well. Some good volume, 4 million shares. So that, I don't mind WGX, WAF, I'm waiting for that to take a bit of a nosedive because that's just gone really hard. But we've taken a partial on that. We'll tighten up our stop probably. I'd be happy to tighten it to say 57 from 50 on the second half and let it go, see what it does. BGL, again, another tougher one if you're looking for some goldies to trade, or you were. To me, it was more, you're just buying it on the lows because that's where you're perceiving the low to be, not any technical reason to buy it, not off a higher low or anything like that. Because that trend, I mean, this is pushed up. You got the press down, pop up here, this zone, lower high, press down, another lower high. There's no reason why that couldn't have kept going down. Instead, it's turned, just gone straight back up. And if you look at the daily, there was no real high or low that gave you a chance to get in. That market just in here since November was really going sideways more than anything else. So if you bought that in there, that was more just luck. There's no reason why gold couldn't have caved in because the markets just took off in the new highs. Everything got sorted out, no coronavirus, and boom, away we go. And then gold gets smashed. So that wasn't, for me, there was no risk anywhere I could place my risk on that trade unless you had really wide risk and a small exposure. Breakthrough 58 with stop down below 45. To me, that's just too far. So yeah, that's your goldies. Let's go on to the others now. We've got OGC red. I've been watching red. OGC, I haven't quite. Let's have a look at that. So you can see that's been in a downtrend. The downtrend's still intact at this stage. So if anyone knows, no, that's not what I want. No, there we go. So that's your weekly. So for me, OGC, yeah, I know it's a goldie and all. It's probably going to get lifted in a minute. It's up 4% today. Not massive volume. Let's just look at the daily again. Not bad volume. I guess the last few days, a couple of good volume days, but it hasn't kicked on. In comparison to what it's done the last few days, it's probably a few months. Sorry, it's pretty much going sideways, just the top end of that range, really. That sideways sort of channel between support and resistance. The resistance up at 310. So for me, I don't see a reason to buy that just yet. I would obviously much prefer that weaker weekly trend. I mean, this weekly trend to me it's got some really, I should just draw it all up. You've got this level. You could say it's a double top. You know, you've got big clean out there, a bit of a pullback, and this action too when you go lower highs down. So this leg up is broken with this move down, consolidates, then starts to lift again, pressed up, and once you press up a second time and you fail, that's either a key lower high or it's a double top coming into play there. And when you get that sort of action when it corrects, and correction, I mean, people to me look at double top slightly wrong. And we've spoken about this before. I think if that's your trend up and that's your anchor, and then we start doing this action and then we come back up and we fail, but you haven't broken the anchor to the uptrend, I don't call that a double top. I just call that, okay, we need a double. And that a lot of the times people go, oh, let's bail through that low and then bang, retest, up we go. And it's just fluffing around. It's just resetting, washed out a few people, but it hasn't broken the uptrend. Whereas when you break the uptrend like this, and if we can just take a step back, if we go back to here, so that's your uptrend, that's your anchor. And if you come screaming down and you break that anchor, and then you go back up, retest, and then start to fail, that's a different story altogether. That is, you're breaking the uptrend, double top. That's a key double top to look at. So they're two different things, distinctly different things. The first one, when you don't break the anchor, could be it's just setting you up, setting up the retail investors. A bit of it's gone a bit hard. It needs to clean out a few of those late buys, cleans them out, gets soaked up, and it goes again. But it doesn't break the anchor. That's sort of key, and it could really, and then all of a sudden everyone sees a double top that gets, the price just goes straight through it. They start chasing it back up again, and all those people get cleaned out, want to be part of the action. They think it's going to the moon, and they start diving back in. When you break the anchor, yeah, it's a different story. It could be some serious underlying weakness into the stock, and that's what we've done on this on OGC. So the question is, if we did break the anchor, where to? So if you can, it's going to be hard. I always find these ones hard. If you've got that sort of, you move down, if you can see, that's probably close to being opposite and even. So that leg down, that secondary leg down, you've probably got a bit extended on this move down. Yeah, potentially so, but you've still got a few zones coming into play. You've got this zone just been cleaned up. That could be a bit of resistance. Draw that a bit better. Around the $3 mark, it's coming to a bit of resistance. We could still be pressing lower on the weekly. It hasn't changed anything on the weekly. This buying up after this sell-off, and we'll probably just go back, show what I'm talking about on the daily. This sell-off here, this sort of chopping around and not really getting the kick on it. It's just not showing any strength on the buy side just yet. There could be some more sell side to come. There could be some more, when you're looking at the weekly, there's still a few people potentially holding it from years ago. Just saying, like, if we see some more weakness, we're starting to get a bit out of hand. We're going right back down. We could be heading back down to $2. Okay, so I've just got that on OGC. I mean, that's in the downtrend on the weekly and the daily, so I don't see any reason to buy it just yet. I'd much rather see this trend down broken, which would mean, a good rally, a very good rally. So if we just go, and this is ideally what I'd be looking for on the daily, because we're talking about, whoops, what happened there? Oh, we got it. We're talking this as a big weekly correction, and we're saying that potentially this zone down here on the weekly could be, from this leg down could be extended. So we're looking potentially for that as a buy zone. Yep, but it's still got to break the downtrend. It has to show us that we're not the only ones thinking that or looking at that. And that to me is, a big rally. It could easily rally right to 350 and then cave in again. Do something like this. You got these rallies here that just kept getting smacked down. This rally up here gets smacked down. All that sort of stuff. So if that happens again, we sort of rally up here, drags in some buys, euphoria, then bang, get smacked down again. We don't want to see that. You want to see it break up and through. So that's your trend down, breaks up and through, and then see this kind of two legs down, and then your high low form, and away you go. You've got a buy entry. That's what you want to see, and that to me would suggest that we're heading all the way back up to 530, 40 to new highs. We'll see how that goes. Red. Red was a tough one. We're looking at this for a while, but for me, alerts would probably, there's a lot of volume on there, 37 cents. That's going up, Vin. I like that. And I like this. It's got funny action, but it's done all the key ingredients. If we just go back to, and look at that weekly, you just break that down. Let's just take that down to here. That weekly looks good. It's bouncing off those MAs. Good pull back to the MAs. Sort of deep correction back to the 50. The 20 is the top one. The 50 is the bottom one. Good pull back to those MAs. Bounce off the MAs. And the second time around, it bounced off the 20, and it's going again on the weekly. So good, some steady volume coming through. More than enough volume. Down to the daily. This sort of move here, we were looking at that, I think. We sent an alert, but it just didn't, for my mind, just did not set up. It's taken off. I would like to have seen a set up around 32. It just didn't play out, but either way, I'm not on board, but it's going up. I mean, that's pretty clear. So I like red. If you break it down, you sort of move down that correction, good wash out of that low with this, pop back up, pull back, got a high low. That there would have been a nice buy through 30 cents with your risk just below 26. Good risk reward. Kicked on, you could have taken some profit, or you could still be holding it. It's come back down. You can see this action on the way down, a lot of red candles and green candles, whereas on the way up, straight green candles. So that's bullish price action, but this is not so bearish, if that makes sense. Bearish price action should be red, and just capitulate. But when you get that interdispersed, I can't believe I said that word, I managed to spit that out, interdispersed with a few green days, that means someone's soaking up on the way down, and this potentially you're going to be looking at this, especially with your stochastics, bit of divergence there, as a higher low. And lo and behold, it did play out quite nicely. Your entry probably, if you're going to be aggressive, was through 31, 32, your risk below 28. And it's kicking on. So for me, it's just got to press through that high there at around pretty much where it is at 37 now. If you can press through there and finish above that, say it finishes up at 38, fantastic. And I think that's going to push into new all-time highs. That's a nice one, red. We've got BC8. Hiya, Pete. Gold spec. Oh, I'll press enter. That there, look at that. Actually, that's good. Black cat. Where'd you get this one from? That's a specky, all right? There's next to nothing. That would have been as an alert wise. This for me, I know none of the fundamentals behind it, but that's good consolidation above the MAs. So if you can see that most recent price action here, push above, consolidate above, and it's sitting smack on top of the MAs. That's really nice. And look at the volume that's come through the last probably week or so. Good heavy volume, and maybe there's a couple of good crossings there. On those days, it was 1.9 million. So 2 million shares went through. Is that right? Yeah, 2 million shares went through. So I don't know what's that. It's about $1 million on that day. So it's quite a bit well above small place. Yeah. So some good volume. So that's good support for the fact that it's sitting on top of those MAs. So I like that consolidation. So to me, the more it consolidates, the more time it puts in sitting above the MAs, the higher likelihood that's going to kick off. And the fact that we've had this run up, good contraction, as in markets, always remember the markets go from expansion to contraction to expansion to contraction. So we've gone through that contractive phase to clean out, say, 50% of this move up. So anyone that sort of bought it late into that trend, so anywhere sort of above 30 at one stage, at some stage, they were under pressure. Anyone that's bought it above 40 is probably still under pressure at the moment. And just seeing this if they haven't sold out already, I'd suggest that anyone bought that above 50 cents, 55 cents has been cleaned up. A bit silly to be holding something, I guess, if you bought it way up there, unless you got conviction in the fundamentals. But yeah, I think that's that move up there with this pullback consolidation. Now you're starting to get this high low play out with some volume. Everything's looking pretty at the moment, and that weekly is looking pretty good. So it's soaked up this selling pressure here, big washout of 30. And then you got to take note of these sort of things. And it's the same on the upside. When it washes out a previous support zone or even a high, but finishes below, or in this case it finishes above. So if it goes up in the resistance zone, breaks out, but on the same day it finishes below, it's not such a good sign. It should have conviction. It should keep going. And the same on the downside, when it gets to support, triggers it, it just triggers, it's going to trigger some stops under it. It's cleaning a few stops out, but then finish above 30, then great. And that's nice to see. And then you get the price lifted back up above the MAs, supported here with some volume. Yeah, I'll be bullish on that one. So it's probably worth, you wouldn't be trading that as a CFD anyway. It's kind of small, 34 million market cap, but it's looking positive. So it'd be good to read the story up on that when you get a chance. Probably not you, Pete. You probably know the story. That I might read the story on that one. BC8. We've got McMahon. Oh, MAH. Just go back a step. There we go. All right, McMahon. Yeah, I'm going to have to step back to the weekly charts. I went on the weekly. Would have been hard to get this leg up here. Just get rid of that. This leg up here, but it's just pulled back. It's a sharp pullback and it's a sharp rally. So I'm a bit suspect. I'm always a suspect of that. Don't like the fact that it's coming off overbought territory on the daily, and the weekly it's we're right up towards that overbought territory. I get a bit suspect that it's not going to be a false breakout through 30 at least, and I wouldn't mind seeing that at least pull back to say the 25 zone, or at least go back to this zone and back in here, and then get soaked up. I want to see some evidence that's getting soaked up. But yeah, I mean, it'd be interesting to see how that one goes. But all in all, that weekly's not looking too bad. Really, the trend is a bit boring. You're probably not going to get much out of it, but that good run up there over a long period of time, was it 1, 2, 3, 4 years? Couldn't get through the highs, had to have a pullback, clean out some buyers, put them back on the sidelines, reset, go again. High, low, you can see, always a high, low. Nice to see a high, low come into play anyway. That high, low comes into play, presses up to 30, a bit of a fall back off 30, and then gets soaked up again. But that move back up is not really much volume. We'll go back to the daily. Oh, look, now it's a bit of volume coming in. But the volume is coming in, say on that day, that's a red day, down day, and at least big down day, some selling coming in. It was getting soaked up, sitting on top of the daily MA. So I guess, technically it is a buy. I wouldn't be throwing too much risk at that because I don't like the way it's come down here and then you get these sharp, moves, big thump up, pull back, and then just grind up, pull back, grind up. And if it keeps grinding up from here and you're in from 30, great. Then you can book some gains on that, but we'll see how that one plays out. I'm like I said, I'm suspect that when the weekly and the daily are sort of overextended up near this 30 mark, it's not breaking through that today, with any conviction. I'm suspect that how many more buyers sitting on the sideline ready to jump in and support that for a move up? I wouldn't suggest to be a hell of a lot. I guess that's it. Let's just see. Still dropping 166, down 166. I think the goldies are taking a bit of a breather. Things are still getting sold off quite heavily. So anyway, that's probably call it a day. There you go. Anything else you want to quickly look at before we pull the pin? $5G and I've got, that's a bit of a bugger. They had some good results on $5G and then bang, same day a seller just came and smacked it for whatever reason. Always strange to see them buy the rumor, sell the fact, and sell it down. Don't just sit on the offer, they sell it down. A lot of volume come through. Someone wanted it lower. Don't understand why. But anyway, that's what happens. All right, guys. So doesn't look like there's anything else we can look at. But anyway, yeah, thanks for joining me. We'll see what happens over the coming days. Let's just see what happens in the US tonight. Like I said, with those indices, there's nothing technically breaking down yet. It's not a great day when you're down 165 points if you're especially no good for the funds or anything like that. But technically hasn't broken anything just yet. Look, I'm not saying that's not to come, but I think if we just go back to the ASX, I just want to show you that the difference, what I'd be concerned about if we get there. ASX, this is the daily. Let's get to the daily. This, this was way back last year. But remember, I don't know if anyone was around then. Most of you were around then. That set of a sell-off, that really grind up. We've been a bit more euphoric lately on the price action here. Euphoric meaning just bang, charge higher, bit of a sell-off, charge higher again through those highs. So maybe it's going to be a bit different if there's going to be a sell-off. But this sort of thing, if you do take out some key high lows like that with this press down, so if we get a good couple of days on the downside with 100 points again tomorrow or something like that, and the euro starts capitulating, and then we get this grind back up, then I'll be looking for a sell on the index and see if this kind of thing plays out. I don't want to see it play out, but that's what I'll be looking for. On the downside, if we get something like this, just some pressure and the market start to hold below the MAs as opposed to sitting on top of the MAs. Whereas at the moment, even though it's a bad day today, doesn't necessarily mean we're going to have a massive sell-off on the cards just because it's down 160 points. Just means there's some trigger fingers, some itchy trigger fingers on the south side. And if that gets soaked up over the coming days, then okay, they're the ones that got it wrong. So yeah, we'll see. If we do sell down to back down to 68.70 over coming days, even clean it out, and then we start to grind back up, that's the price action I don't really want to, as a bull. And we get this kind of thing, grind out where you're not really clearing out the highs by anything significant. Because if it's a bullish market off there, if it's still going to be a bullish market, you should see the market, pull back and reset, not just grind back up again and take out the highs, deep pullback, take out the highs. What I mean by that is when you take out the highs, this deep pullback here, and then we just pop through the highs, and then you have a deep pullback. On a positive market, it should be something like shallow pullback, big move, shallow pullback, big move. That's a positive market. That's not. If we get that price action start to play out, then I'll be looking for a move down and then that overall trend breaking. But that's going to take some time to play out. That's what we just want to keep an eye out for. To our risk-adverse nature. Anyway, guys, thanks very much for joining us. Have a good rest of the week. Any questions, feel free to send us an email to support@tradesetup.com.au, and we'll go from there. Cheers, guys. Enjoy. Bye.